Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again at the gold market. On the gold market, it's really amazing and interesting situation because market has reached our first, if we could call it, must target. As we said within the recent months, that market should clear, wash out in the 1180s area. And after that, we will start to think about what will happen next. So as you can see, our task has been completed. This market really has taken this target. And right now we mostly have the strategical question, how deep market could reach below the 1180s. So will it be 11 even, will it be a 1050 or some other level? And if this is a bit really long talk on this problem, and if you really would like to know some details, you could read our weekly research. So because there in the monthly part discussion, in the fundamental discussion, we just point on tools that we could apply to get some answers. But shortly speaking, we suggest that the nearest perspective investors probably will try to reassess the attitude to the gold market and then understand what to do. Because despite what traders in Asia talked about the individual physical demand on the gold market in the period of the holidays, on the period of the festivals, and then this is really traders tell about the growing of the physical demand from the individual buyers for the 20% on the year-over-year basis. But guys, individual demand is just a part of the annual gold demand that is easily could be forecasted, and it takes not really very significant part of this demand. It's approximately 25-30% of the annual physical demand that in general stands about 6,000 tons. But imagine what investors' money are. So just the net position on the gold markets, the net position, the difference between the short and longs, stands approximately for the 50% of the annual demand. And if you will take a look at the open interest in the futures market on the gold market, it stands at 10 times greater. So that's really the money that driving the gold market, but not the physical demand of the individuals. This is significant, this is important, but hardly it could become the really driving factors. And the recent rally that we've got on the daily chart just has confirmed this. On this rally market, we have read in the daily updates day by day that traders in China and Hong Kong sees the demand from the individuals, the coins. It's really sells very, very good and so on. But you could see what has happened next. So any rally that hasn't supported by real inflow of the individuals, of the institutional investors, sooner or later will be doomed. And as this PDR fund reports the decreasing of the charges on this rally, as CFTC data hasn't shown any net long position increasing and open interest growth with this rally. That tells us and told us that this will happen sooner rather than later. And we've got the result here with this plunge. Well, that's why the tools to resolve the strategical question, how deep market could fall on the gold market, will stand in relation to the data that we will get in the nearest weeks from the CFTC and the PDR fund. If we will see the changing on the sentiment and real growth on the storages and speedier fund and growth on the net position with the open interest in increasing on the CFTC. This will tell us that market probably is ready to significant move to the upside. We will not call it as the reversal by far, but if the real sentiment of the institutional investors will start to change, we should be ready for a significant retracement up. Maybe this will be a reversal, who knows. If we will not get any difference, any changing in the position of the institutional investors right till the end of the year, that will suggest that market is ready to continue move lower. As seasonal bullish trend mostly will end in January, and the lack of the demand could even lead to the more decreasing of the gold market in the beginning of the next year. That is what we will do with our strategical question. In the shorter term perspective and tactically, I will take a look at the daily chart, what we in general could expect on the next week. Currently, guys, take a look at this low. In fact, market has stopped at 1155, 1160 area, not just occasionally. But if you take a look at the monthly chart, you'll see that this is one of the major 618 fib supports on the monthly chart. Also, guys, you can see that market is deeply oversold on the daily chart. This deadly combination for the downward continuation suggests that this is not quite logical right now to take the short position. That's why we have called you to tight stops or even taking profit on our position, because as we said, our target has been completed, and to point and be sure the market will continue to move lower, we need some more clarity and more information. Right now, we can't promise you that market really will continue to move down. We suggest this, and fundamentally, this is really very probable, but we need some confirmation that the sentiment of the individual institutional investor hasn't changed. That's why in the current situation, if you're a positional trader, it's probably better either to take profit or at least to not take the more shorts right here, and just wait when the retracement, some bounce up will happen. If you're a scalp trader, that's the chance for a possible scalp long position on the intraday charts. If we will take a look on the, because market started the support, that's monthly fib support, that is also daily oversold. If we'll take a look at the forward time frame chart, we'll see that the recent thrust down is very nicely looking, and this could be the background, the foundation for the Napoli direction, for example, double repo buy or something of that sort. If this will happen, we think that the most probable target of retracement will stand at the 12 even area, because on the daily chart, if you will take a look at it, we will get the 12 even fib resistance of this move down. That's also a combination of the monthly pivot point, that's November pivot point, and take a look, weekly pivot point. Also, by this action, market could retest the broken 1180s lows. That's very typical for the gold market. This is one of the habits of the gold market, to retest broken significant lows. Here, market has retested 1240 lows. Here, market also could retest 1180s, right? And if it will be the double repo buy, the target of this pattern will be at the 50% resistance of the thrust of the double repo. That stands approximately the same area, 1196. So that's why if market will give us any reversal patterns here, for that purpose we will have to look for hourly charts, 13-minute charts in the beginning of the week. If we will get any reversal patterns here, we could try to take this scalp long position with the target somewhere at 1195, 12 even area. That's the object for job on the market in the beginning of the next week. And after that we will see what will happen, what market will show around 12 even area.